I think it's going to be a big week this week. Let's go ahead and get started with what I saw today. Here I am with the daily charts pulled up of Oracle, GNPX, American Eagle Outfitters, and the SPY. You can see that Oracle had a pretty red day today, falling below a rising trend line. So here we go, feeling bearish again. I did my puts on Oracle, and I am looking for a $72 price target in the future. GNPX continuing a bullish breakout above a downward trend line. A couple of them down trend lines, we'll get into that later as well. American Eagle also breaking out above a downward trend line. Excellent, excellent, excellent. Love to see it. And the SPY not having as much luck, actually falling below a downtrend or an uptrend that it had recently set. Let's go ahead and look at AMC first. Everyone wants to know what's going on with AMC. Well, here we go. This is the 1 minute chart, and what I have showing currently is a downtrend, and I saw the spike this morning right here, and this volume spike told me that, hey, we're probably going to see these levels of support and resistance break, and that's exactly what happened, and the price plummeted. And what we have now is a nice bear flag shaping up. That would be the flagpole, and I probably don't even need to draw it for you to see it, right? There's our flag. We have parallel trend lines, or near parallel trend lines, and the price is, breaking out below it currently, and it looks like the price did close outside of that. How you want to draw that matters. It really does, because you never know. Maybe we say, hey, that's double bottom back there, so we're going to put that double bottom outside of our horizontal support trend right here, or horizontal support and resistance line. And then, I don't know, it gets weird, it gets wacky. This is a weird stock. I don't this is why I say that the flag, I think, is the best bet. Best pattern, bearish flag. And that, of course, would lead to another downturn. And once we get below 14, how far can we go? Well, our last major low was down at 14.23, and I would not be surprised to see the price fall again to that level and then fall beyond it, and with momentum. Let's turn on the daily chart and get an idea of what today's action looked like. Let's see, I think default, right? Very top, there we go. And enhance. Okay, what a weird cluster of candles. Jeez, as you can see, this yellow line, this is an internal trend line, and I will get into that after I look at this candle. As you can see, today's low was lower than the prior session's low, and the high was higher. What this means is a bearish engulfing candle has formed, and this is going to probably lead to more bearish action. I've been talking about the RSI and how I've been expecting it to bounce off of that 30 level and continue down lower. We do see something like that starting to shape up now. I'm not looking for any sort of bullish divergence yet, because the RSI has re-entered the oversold area. Volume was very low, very far below that 30 period average, and it has been ever since we saw this big volume day. So what do I think? I think that we're going to see another big dump and another high volume day, and the RSI is going to plummet again, and that's going to be a wild ride. The implied volatility has been going sideways. This has been our consolidation period, and I said it back here that I expect a couple of weeks of sideways action in this trading area below the gap zone and above this level of support and resistance, which is the descending triangle target, and that descending triangle is shown above in this cyan color here. And sure enough, we have seen a lot of sideways action, and when the price did break out here, I said no, this is bearish, and we have had this bearish continuation, and even this looks like a bear flag on this time frame as well. All things said, I think that there's still more downside to come in AMC. And I know that being openly bearish and having that analysis has reduced my views and my subscription count, but I don't really care, because I want to produce good quality content analysis that makes sense instead of just confirming people's biases and trying to get along with the crowd. I want to make money, and I want to have the most reliable analysis that an amateur can provide, right? And I really do feel like I've been calling this pretty well. I don't know if anybody else has been calling it quite as accurately. To be honest, I've stopped listening to other YouTubers talk about AMC. I really have, because for one reason or another, I get upset because there's either too much bias or too much speculation or lack of citing of different theories. And as you know, all of my stuff comes straight from Bulkowski's website and his books. I'm thinking about lining those up back here, like during my videos. That might be kind of fun. But I am using them to hold my microphone up. Let's turn on the Trendline Study and see what we see here. Now that internal trend line, as you can see, the price did approach it, opened near it, came up, and then boom, This is very bearish. To see the price move above that trend line, get knocked down, approach it again and get knocked down again, tells me that we're probably going to return underneath this this other trend line, which is just an acceleration of this primary downtrend. And you can see how far away the price is from that downtrend. Now, when this downtrend breaks, there could be a really big bounce. The way you calculate price targets from broken downtrends is you take the height of the pattern, the furthest, the most distant price, and you measure the distance to the trend line, and you apply that, and that's your breakout price. So seeing the price move so far away from that trend line tells me that when this trend line does break, there will be a big bounce. But again, it has to break out first. It could possibly never break out, and then when it does, it could just be a nothing burger, right? Depends on how far the price goes. The way I see it on a fundamental level, AMC is essentially acquiring new debt to pay off old debt. And that doesn't really pay off the debt, right? It just kicks it down the road. It just kicks the can down the road a little bit. It's not a permanent solution. If you can't afford to pay off your senior notes without issuing more senior notes, that's not good. And if you're offering a lower interest rate on those bonds, that's worse. And worse yet, they're junk bonds, right? So if you're gonna try to issue junk bonds into a risk-averse market, I mean, I don't know. Like, I think on a fundamental level, there could be a lot more downside for AMC, and the pain could continue for quite a while longer. Of course, if you're trading the downside and using puts, it's not really painful at all. All right, the price just moves, and how you feel about it just depends on your position to it. It's like a wildfire, right? Wildfires, bad. Campfires, good. Fire is fire, right? It just depends on your relationship with it, right? So I, of course, don't really need the price to move either direction because I'm willing to trade both ways. But looking forward, the trend is down, and I do see bearish continuation shaping up. And if this is a point of consolidation in the middle of a run, the next run down is going to be, again, very, very, very volatile. So that's my analysis on AMC. Sorry, no good news there from me, not yet. Let's go to Oracle. Now I want to talk about Oracle because I've been trading it since I saw the earnings kick the price way up and then watch the price fall. Just it just keeps falling and falling and falling and falling. And there have been a couple of areas of support through here. We can see these green lines. These are my corrective trend lines. And what happened today is the price actually fell out and broke below. I'm going to zoom into the 1 minute timeline now, and we're going to get a better idea, yikes, of what that looked like. Look at this clean fall, break, confirm, and then just fall to pieces right towards the end of the day. And of course, big volume at the end of the day. I am holding some puts, $81 puts. I think I traded one. I sold one. I bought it and I sold it, so I took some profits there. But I am holding one for next week, I believe, at $81. I do see the price falling to 72. I want to explain why really quickly. Just zooming out and looking onto the daily chart, right? I'm looking for areas of support and resistance, and I don't see much. There is a gap zone here, but that's where we're at now. Once we break through this area and continue to fall, I really see this horizontal support or resistance at 73.60 providing support, and really 72 being where I expect that to stop or to really find support right here-ish. So yeah, I think Oracle is in for a little more hurt. The RSI is starting to keel over. Let's go ahead and zoom in on that. What does that look like? Jeez. As the RSI reaches and approaches 40, it starts to turn down. And this is a good example of a bearish breakout. And as the bears gain momentum, we'll watch this RSI continue to fall towards oversold. Our volume today wasn't very high, but it doesn't need to be for a breakout. It can be a low breakout. That's not necessarily terrible. As you can see, it wasn't the lowest trading day we've had ever, but it wasn't near that 30-day or 30-period average either, falling about 3 million short. So that's all right though. Implied volatility was rising. I think that playing puts on Oracle is going to prove profitable for me in the future, as it has so far in the past. It's just in a clear downtrend to me. I think a lot of the tech sector is going to get battered, continue to fall. I know Nasdaq has been under a lot of pressure lately, like the QQQ. Let's look at QQQ really quick. QQQ. Yeah. So as you can see, the Nasdaq seems to. Let's go ahead and just draw some chart patterns here really quick. You know, there's something, right? Here we have an ascending broadening wedge, or maybe a channel, but I'm gonna call it an ascending broadening wedge, and you can see that there was a partial rise right there, which was a bearish Q, and the price did fall down. And we did see a pullback up into the range of the pattern and then a continued run until we found ourselves in another topping pattern right here. I'm thinking that is a topping pattern right there. I think that's how I'd want to chart that. And I can use the RSI to help me. So this level would be in the overbought area, and I'm looking for the RSI to be relatively high here. Ooh, but look how low it is. The RSI is actually down in the 60s at this point in time, but that would be a bearish signal, and sure enough, bam, the price falls apart. So in this pattern, we would have had the start of the pattern, a touch point here, a touch point here, and then a couple of touch points down here on the bottom as well. I'm gonna go ahead and change the direction of the arrow. I learned I can do this right here off of this menu, which is nice. Duplicate drawing, duplicate drawing, duplicate drawing, and then this was the breakout. And the price target has certainly been met from that fall. It's not a very tall pattern, but the price has fallen quite a ways. And now what I see is what I see in the SPY too, which is something of a measured move down setting up. We did have a nice enthusiastic bounce, but now we have this point of consolidation. The RSI is not rising above 50. It's really struggling, and implied volatility is starting to creep up. It looks like this could continue to fall. Now, I didn't really anticipate talking about QQQ or talking about the NASDAQ. Let's go ahead and open up the SPY and open up my patterns here, or my charts. And you know, this is the same story, right? This is basically the same chart, and what we saw the SPY do today was approach this corrective wave, which is misplaced at this time frame. So we're going to go from the lowest low to the last minor high, and not overwrite the price. And I find this to be the most valuable when I use a little discretion. So I'm going to exclude the tail of this candle. This was a big volatile day, right? So if I chop off its tail, I think that's okay, as long as I use the opening price, which would show that, yeah, that corrective phase has broken. And that would agree with the RSI, which again has failed to reach a bullish level, which I consider to be 55 personally. So 53 turning down is bearish. Volume was a little closer to that 30-day period average than on some of the other symbols we've been looking at, but this looks bad. This looks like a continuation of the downtrend, and I've decided that I'm not going to play puts on the SPY. There's just some moral hazard there, right? Of being able to profit from the markets tanking. I understand they're overvalued, but I really don't feel like I should be swing trading on an index ETF. It just, I know, it just seems like one of those things I could do, but maybe I shouldn't. Just because I can doesn't mean I should. So I'm going to stay off the SPY. If I were to go long on these on SPY and buy shares and then hedge that position with a put, that'd be different. I just don't want to contribute to a downturn in the market due to greedy swing trading. So that's where I'm at with the SPY. I want to talk about GNPX today. I really do. Whoops, that GNPX? There it is. I went ahead and revised my charts just a little bit on GNPX. I thought maybe I could make a better, clear picture with the additional passage of time. Okay, so here's this uptrend, right? And that broke. We had this downtrend. It continued, and the price plummeted and plummeted and plummeted and plummeted and boom, boom, boom. And then we had this big whoosh up, and that was fantastic. What a news event that was. And then of course we have the corrective drop down and the swing up, and then we have this reversal here, and then another news event here. And what I am really liking are these two green candles right here. This looks pretty bullish to me. It really does. Hey, I want to go ahead and zoom in on it. Maybe I can give a better analysis there. It just looks really good, doesn't it? It looks like a measured move up. Leg 1, consolidation, leg 2. And I like that. I like to see that. It's also very important to see that the price is closing above these relative highs. Well, besides this one, this was a news event, right? Big volatile candle there. Look at that spike in the volume. RSI going way up. What I do like to see is the RSI starting to turn up above that low 40 level. So this is bullish to see the RSI starting to move up and down, but above that bearish range. I do like that. The implied volatility is falling, which is interesting to me. I will have to look into why that may be the case. The implied volatility here has been kind of hard to read for me. This is not super clear, but it's also been, the price has also been moving in a pretty locked trading zone, somewhere in from $1.50 to $2. And here we are closing at 225. So I went ahead and I bought 100 more shares of GNPX today because I'm just bullish on it. I really do have a lot of good hope for the company, and the technicals just look really good. All right, this is a big downtrend. This is a big downtrend. Look how long this downtrend is, right? In fact, let's do a little analysis here. Let's just say that this point here, this is our greatest distance from the trend line itself, and let's calculate the breakout price, right? Which is roughly just going to be the height, so $2.31. I think that's our greatest distance along the trend. Just going to do a little check here. Yep, it definitely is. And so the price target for this trendline breakout will be 230 plus the breakout price, which may have occurred right there. And boom, where does that put us? Up at 450. That's fantastic. That is absolutely fantastic. That would create a new high from this point. And what that would do is it would create a very strong uptrend. And I can't quite start that uptrend until I get a higher high from here. But that essentially would give me the ability to start the downtrend from the lowest low, and then not overwrite the price from in between there, that new highest high, the new minor high, and that low. And that would look something like this, and this would be the new uptrend. And I would expect this uptrend to last quite a while. And I'm gonna go ahead and draw it right now, but this is what I'm hoping to see in GNPX. Yeah, that's what I'm hoping to see right there. A nice bullish bounce, a nice V-type bottom, and then maybe once we get up to this 450 level, we see this period of consolidation through here. That would look something like this, right? Yeah, that makes sense because there's going to be horizontal support and resistance around here. So I would expect the price to break up and over that, consolidate in some way that it'd probably have a pennant-like shape. And I don't know how long it would be. I don't have a good approximation for that. But if I had to guess, it wouldn't be this long. It'd probably go through that trend like this. It'd probably be a false breakout of that new uptrend and then bounce and rip back up into it. That's what I'm looking for in GNPX. I am really happy with this trade so far. And I think that's all I have. Oh, I wanted to talk about American Eagle Outfitters as well. Can't not talk about American Eagle Outfitters because American Eagle is also doing some cool stuff. It is moving in this triangle. You can see today we got a new touch point on top of that descending triangle. Is it a triangle or a pennant? I'm not going to fuss with it right now. The RSI is right here in the middle of between the bullish and the bearish regions. It is still consolidating. I'm waiting for that breakout. I'm going to go ahead and turn on some other drawings here. The daily. This features a falling wedge, which you can see, and I do have this corrective downtrend shown, and it has been broken out of. I'm going to pull up a smaller time frame and we can get a better picture of what that looked like. Yeah, that looks good, right? So what I'm doing here is I'm taking these lows, and you know, it's basically going to be these two lows that form the trend, because here's the last minor high, right? So this trend line has been drawn, or could have been drawn way back here, and the price did bounce right at that point, and that's a really good indication that this is a solid trend. The price did fall down below it, which caused me to draw this trend line, and the price has now moved above that level and closed above it, which looks really nice. And this kind of looks like a scallop, an ascending scallop on the 1 minute, the intraday. The RSI is starting to reach that overbought level, but that's okay. It hasn't quite reached it yet. And again, this looks like a good measured move up, doesn't it? Another move of similar amplitude would break the falling wedge. I'm really optimistic here on American Eagle Outfitter as well. So that's what I have for today's video. Happy trading.